It's the Real Estate Podcast, brought to you by ANZ Home Loans for financial well-beings.
And welcome back to another episode of the Real Estate Breakfast, talking real estate property news, of course, 7 days a week, as heard on iHeartRadio, Spotify, Apple Podcasts and Amazon. Back from a weekend that went by way too fast for my money. Monday, July the 8th today. I hope you had a fantastic weekend. In fact, over the weekend, I was watching a Netflix series called Roommates from Hell. Absolutely terrifying what some people have had to endure. I suggest that if you're looking for a roommate, don't watch the series because it will put you completely off. Let's catch up right now with Eliza Owen, the head of research at CoreLogic. And good morning to you, Eliza. I guess, for a lot of these Australian people that are renting, they've got to pay the mortgage. They are renting out these rooms, aren't they? It is a factor.
Absolutely. And good morning. Thanks for having me. We've seen another strong rise in rent values over the past year, still sitting well above averages of 2% a year through the 2010s. So you're quite right. People are hoping to alleviate these rental and in some cases mortgage costs, supplementing with a roommate and extra rental income. And I think, shows like that just go to show the downsides of sharing your space.
Yeah, and make sure that you do background checks, because on the series on Netflix, it did illustrate that people were just not doing any background checks. In fact, they weren't even jumping on to Google to search people out. And I think it's always a bit of a red flag if you can't find anything on somebody. So be very, very careful with that. Yeah, it's just at that stage of the year too, because we're looking at August and there is this new renewed fear, I guess is what you could call it, from the RBA with them meeting in August and whether or not, a rate rise could happen.
Absolutely. One of the things that's really stoked those fears at the moment has been the May monthly CPI indicator. So it's trying to gauge inflation on a monthly basis. And in the year to May, that indicator suggests that inflation has actually picked up by 4% in the headline results, and even stronger when you strip out some of the volatile items. It is worth noting that the monthly indicator isn't as good as the quarterly indicator that we'll get at the end of this month. And there's other reports on the economy to still come through, like labour force data, business sentiment. So it's not guaranteed that we'll get another rate rise. But if we do, that's sure to put more pressure on mortgage holders. It's going to probably slow demand for housing as well. And so that could affect people that need to sell their property if there's fewer buyers out there when interest costs are sitting higher.
Do you feel that we're at this kind of tipping point? Because I was talking on Saturday with Anthony Landau just with regard to arrears, which seems to be ticking up as well.
Arrears have risen over the past few quarters, really since the June quarter of 2022 when interest rates were starting to rise. But it's worth noting, even with an increase in the rate of arrears, it's still very small overall. It sits at about 1.6% of outstanding housing credit that's coming in more than 30 days late. So I think when we talk about the increased risk around mortgage serviceability when you've got weaker economic conditions and higher interest rates, it definitely flares up, but it flares up in certain pockets of the market. Some of those pockets we've seen are the more outer suburban peripheral areas of Sydney and Melbourne, where housing is expensive and you've probably got people on slightly lower incomes struggling with their rising mortgage costs.
And talking about the property market being expensive, Australian dwellings, let's talk about the values, which of course increased a further 0.7% in June, taking growth to 8% across the financial 2023 and 24 year. Now, this is the equivalent of around $59,000 you guys have reported on increase to the median dwelling value in Australia, which is now at $794,000. And beneath these reported numbers, of course, the market is running at different speeds. Now, that won't mean a lot to most people feeling very happy, of course, that the 23-24 financial year is seeing growth on their properties, but it is a factor, isn't it, this two-speed market?
Yeah, I think that's one of the things to understand about housing values rising month after month after month is that increasingly it's being driven by a select few markets. And what we're finding is that about 70% of the growth in home values in the combined capital cities for the month of June was driven by Brisbane, Perth and Adelaide. These are relatively affordable markets, although Brisbane has admittedly become less so in the past few years. But what that suggests is that in a high interest rate environment, especially where borrowing capacity is limited, people who want to buy property are being skewed to the more affordable markets. At least in the past 10 years, this is the highest level of diversity that we've seen in the annual capital growth trend, which ranges from a 23.6% increase across Perth in the financial year, all the way down to a fall of 0.1% across Hobart.
Yeah. All right. So we're talking with Eliza. When we come back, we will talk a little bit more about those regional markets that have shown a similar trend to the capitals and look at some of the regionals. We'll do that next.
It's the Real Estate Podcast, talking properties from 6 a.m. every day, from every corner of the Australian real estate market.
Well, I'm sure that there's going to be a lot of real estate agents treading very carefully today after a Canberra woman was awarded damages after a real estate agent entered her bedroom during an inspection. The ACT Civil Administrative Tribunal heard that the woman was in bed with her infant son when the agent entered without ringing the doorbell. She testified that she hid under the sheets, terrified. The agent claimed that he had knocked and called out before using a master key, but this was disputed, and the ACAT found the entry constituted trespass and violated the tenant's, with inverted commas, quiet enjoyment. The tribunal then ordered the landlord to pay $2,135 to the tenants and return $1,155 of their bond. So, as I say, a lot of extended knocking on doors today around Australia and ringing buzzers, maybe a little bit longer than normal, just to see if a response is forthcoming.
From powerful and up-to-date news to professional real estate experts with the latest property trends on the Real Estate Podcast.
And it is a Real Estate Monday, back after the weekend. With us is Eliza Owen from CoreLogic. And you were just touching before the break on regional markets. Now, they have shown a similar trend to the capitals, with regional WA leading the pace of the capital gains with that 1.5% rise in June and 16.6% increase over the financial year. Regional South Australia and also regional Queensland are also getting in on the act as well.
That's right. So when you say that the growth in the regions is kind of mirroring what we see in the capital cities, in the same way that Brisbane, Adelaide and Perth are leading growth in the capitals, regional Queensland, South Australia and WA are leading in the regions. Each of those markets has increased more than 10% through the financial year. But then on the other end of the spectrum, weaker markets have been regional Victoria, where values have fallen 0.5%, and in regional Tas, values are only up 0.7% over the past year. So this comes back to some of the supply and demand factors that are affecting those capital city markets as well. Interstate migration trends have been pretty weak through the past year, with net losses for Tasmania. And of course, Victoria saw big declines in interstate migration trends through the pandemic period. So the state market might actually still be reeling from that loss of population. of course, Victoria has seen additional levies put in place for investors. So even though that's probably not the sole factor that's driven weaker growth in the past 12 months, it certainly doesn't help new demand. And so what we're seeing is that more investor and mover interest alike is going to Queensland, South Australia and WA.
Yeah, and having a look at that demand, because you've got those two converging factors. You've got the demand on one aspect and the migration that you touched on, interstate migration happening, and then all these international migration people that are coming into Australia. It's just, do you feel that it's like pouring petrol onto the fire at the moment with the way the migration is going?
It's definitely added to what was an already tight market through the COVID period. When Australia's borders were closed to overseas arrivals in 2020 and 2021, we saw an increase to housing demand anyway. And that's because people's incomes at the time were rising. It's because average household size fell and people domestically spread out across the market. That pushed prices higher. It also really tightened up the rental market. And so the reopening of Australian borders was adding fuel to that fire. It is worth noting that part of the reason net overseas migration is so high right now on a broad basis is because we're still playing catch up. Those people who didn't come to the country through COVID border closures are now arriving. And we've also seen fewer departures because usually by now, people who would have arrived a few years ago, temporary migrants, would be leaving again. But they didn't arrive, so we're not getting the departures. So that's why your net overseas migration is so high. And it also comes back to policy frameworks around migration as well. If you have a more targeted migration program that is perhaps more aligned to the delivery of housing supply, then you can avoid the mismatch that we're seeing in the supply and demand of housing at the moment.
And I know that you sort of pay a lot of attention to external factors. I mean, this is beyond our control in Australia, but one of the big factors we were talking about on Saturday is the Donald Trump factor, you know, if he becomes the president. Now, we know that under Donald Trump, the economy wasn't so flash, and you look at the economy in America at the moment, it's going great guns, for sure. Most countries would love to have their economy, but there's this looming election coming up in November where literally, Eliza, anything can happen, you know?
Absolutely. And I think, you know, as I've said, if Donald Trump gets into power, there's probably a lot more things I'm going to be worried about than the Australian property market, but we'll just have to see how it goes.
Yeah, it's definitely one to pay a lot of attention, who is going to have that immunity from prosecution. So, yeah, some dangerous times. Eliza, thank you so much for coming back onto the Real Estate Breakfast. A lot of things, of course, to think about, and enjoy your Monday.
Absolutely. Thanks for having me.
Explore new property destinations where you could live with exclusive interviews covering real estate news and market insights.
But really getting to know the person, identifying their strengths and weaknesses and putting a team around them to help in some areas that they're perhaps not efficient at will ultimately help them grow. We certainly don't like the idea of the old days where you put an agent into an office, give them the old digital phone book and say, off you go.
So if we go back about 20 years, at that time, the number of underinsurance in Australia was at 81%. If anything, we've got worse by a couple of percent.
Look, I'm seeing a lot of first home buyers that are, they're really turning to the bank of mum and dad. And we're seeing it every weekend where they're going out and they're borrowing $5,000 or $10,000 from family just to try and get them over that last little hurdle.
Oh, it was. I was working, 12-hour shifts, especially through COVID during that time. So the money was great. I've definitely taken a bit of a pay cut from there, but I think the flexibility that real estate has, it just suited my personality a lot more.
We connect you to the best real estate information across Australia. The Real Estate Podcast.